Hello friends, in the series on the income tax cases, today we will discuss the case of IFCI Factors Limited versus Bank of India and others. This case has been reported in 455 ITR at page number 705. The matter has been decided by Delhi High Court and the date of the judgment is 31st August 2022. Friends, in this case, a very unique situation has arisen before the Delhi High Court. In this case, there was a petitioner company who has to take the money from the assessee. The assessee went to the bank, made an FDR, and the lien was created in favor of the petitioner company. The purpose of this lien was that the liability of the petitioner company was secured by doing this FDR and by creating the lien. The petitioner company wrote to the bank for the liquidation of that FDR in favor of the petitioner company because the lien was in the favor of the petitioner company. But Bank of India denied to encash the FDR on the plea that they have received a notice under section 226 subsection 3, and the Bank of India instructed the petitioner company to seek no objection from the income tax department before liquidating that FDR. It was the plea of the petitioner company that the lien was created before the income tax notice, and since the petitioner company is a secured creditor, so the secured creditor has the right to first to claim that FDRs. But the Bank of India didn't take any chance because it was the notice of the income tax department. So the Bank of India denied to liquidate that FDR in favor of the petitioner company. The petitioner company went to the Delhi High Court and pleaded that this FDR should be given in favor of the petitioner company since the petitioner company is a secured creditor and the lien has been created before the notice of the income tax department. So the petitioner company has the first right to recover that amount. Now the moot question before the Honorable Delhi High Court was that whether the income tax department has the right over the petitioner company who was a secured creditor or a vice versa. So in this case, the Delhi High Court gave the decision in the favor of the petitioner company who was a secured creditor of the assessee and said that the lien was created in favor of the petitioner company much before the notice issued by the income tax department, and in this cases the secured creditor interest will prevail. Friends, this case is very important for all the bankers because when they give the loan to the various clients, then their properties are kept as a mortgage, and it may happen that after giving the loan, the situation may arise that the department may attach the properties of the clients of the bank and try to recover that amount from their properties. So in that situation, this case will help them because the bank will be a secured creditor in that case, and the banker will have the first right over the assets of the assessee. Although I was reading one case that in case of insolvency, the Supreme Court had said that the income tax department and the secured creditor will be treated at par. But I have to go through that decision. I have not gone very thoroughly through that decision, but as far as this decision of the Delhi High Court is concerned, this gives the favor to the secured creditor over the income tax department. Friends, at the end of this video, once again I am repeating the name of the case. The name of the case is IFCI Factors Limited versus Bank of India and others, and this case has been reported in 455 ITR at page number 705. The matter has been decided by Delhi High Court and the date of the judgment is 31st August 2022. Friends, I just want to say before concluding this case that before relying on this deliberation please go through the contents of the case. Please go thoroughly and read the case thoroughly so that you can apply the facts of the case discussed with your case, because every case is different in law. The situation changes with every point, with every minute facts. So before correlating this judgment, it is always better to go through the whole judgment. Thank you, friends.